Yeah, morning, Tracy. We have a look at our opening calls for Asia at the moment, and I'm saying this sort of 20, 30 minutes before the close of the US markets. We're seeing a bit of a flat market. We're expecting some outperformance from Japan. If we look at the Nikkei call at the moment, we're up about 40 basis points. The ceiling on the market there, as you see on the daily, is 33,800. So if we can get a break of that, in the sessions ahead, that obviously gives us some momentum move into year end, and something I think will certainly be well traded by what is effectively the darling of the Asian indices this year. One of the other trends we saw yesterday was in China. If we have a look at the Hong Kong markets, the H shares or the Hang Seng, they did outperform what was happening in the mainland markets. If you're looking at the A50 or the CSI 300. So I'm looking at the idea of doing a long-short strategy. We long H shares, long Hang Seng, and then short the A50 to see if that outperformance can continue to go forward. But if we have a look at what's expected there, and also in the ASX 200, we are expecting a fairly flat picture on the open there. And if we have a look at leads, they are somewhat quite uninspiring. We've got the Euro stocks down about 40 basis points in the S&P. You can see that the market opened in the cash, 45.46 was the low, we're down about 13 handles. And from that point, it's been very, very messy intraday price action playing through. As I say now, we've got about 39% of stocks higher, so breadth is pretty poor. We can go into the sectors and see REITs performing quite well. Discretionary's done all right. Amazon's working quite well on the session there. Tech hasn't really given us too much. We've got the Nasdaq pretty flat on the day, but the tech index looking pretty flat on the day. Banks haven't really participated. We've got the XLF down about 0.3%. Regionals underperforming in that situation as well. So you can see on the downside there, energy and healthcare and industrials taking out a few points. In fixed income, you've had a 2 and 5 year bond auction gone away. I don't think that's going to inspire anyone. Fairly weak demand across both auctions. We also can max that up with a 5.6% drop in new home sales, and also a Dallas Fed manufacturing number, which was pretty poor as well. And you can see across the curve, despite those bond auctions being fairly poor in demand, that you've got bond yields rallying across the curve, anywhere sort of between 5 and 8 basis points, depending on the tenure you're looking at there. Break evens down a little bit, and you're seeing real rates down about 3 basis points at the moment. Now that has manifested into a weaker US dollar once again. Obviously there's momentum to the downside in that. We've got the Dixie just off the lows of the day. I think you've got to add in some month end flows really hitting that one as well. But if you can go across the different currencies, that we've got certainly the Colombian peso ripping once again. I mean, it's been an absolute blockbuster year for the Colombian peso, but we're seeing good gains in the NOK. You can see Aussie dollar breaking out above that 66 cents with that US dollar weakness playing through. Cable continues on that bullish ascent, and we've got euro dollar looking like it wants to go and take last week's highs out, so something we're watching as well. Even the yen seems to be working on the trading session. Where we're not seeing the gains is in the Mexican peso and also the Chilean peso as well. Gold's been well traded by clients, and certainly in the market you can see futures volumes very, very high on the day. We're just holding the breakout levels, the recent highs of 2009 dollars per ounce, and so we are trading just a few bucks above those levels at the moment. We did get up to 2018 in gold, but we just come a little bit off those highs. Obviously that dollar weakness and the fact that we've seen real rates under a bit of pressure helping the gold market, and we're seeing silver working well as well. We're seeing crude down about 70 basis points at the moment. We're seeing nat gas down 2.7%. That market looks pretty heavy. Now, as we look ahead, not a huge amount really for focus on. We've got home prices to focus on in the US, and also consumer confidence. But again, watching that tape in the Chinese markets today.